Today's rise in the share market has been put down to the fact that America and Europe did a trade deal yesterday. Now, I'm not sure that Australia's banks and retailers stand to gain from that, but I think they just benefited from the warm glow that comes from any trade deals being announced instead of trade wars. Same thing happened last week when the US deal with Japan was announced, even though it resulted in a steep increase in tariffs on Japanese imports. Japanese shares surged in relief and the global index also jumped. The deal with Europe is much the same as the one with Japan and also surprisingly one-sided. 15% tariff instead of the 30% threatened in return for lots of cash. But although the US has a big trade deficit with Europe in goods, the whole picture is very different. The goods deficit, a lot of which is German cars, is entirely offset by services exports to Europe, including royalty payments for US intellectual property. So the current account balance is roughly zero. On commodity markets, the iron ore price dropped more than 3% after news that global steel output fell 5.8% in June. The US share market rose on Friday, but in Japan, stocks retreated today, and the Aussie dollar is down slightly at 65.5 US cents. Finally, an arresting graph of public or government demand as a percentage of GDP hit my inbox from Westpac today. Now, after averaging around 22% of the economy from 1975 to 2015, government spending has exploded to a record 27%. Now, 5 percentage points might not sound very much, but it's about $130 billion a year, equal to the mining sector's share of the economy in the mining boom. So now we're in the midst of the government boom. And that's finance.